Hi everyone, this is Paul Lang from DTS and I want to introduce you to what you're about to watch. It's an hour-long event that was presented live to free members at Disciplined Trading Strategies. This is called Educational Highlights of 2024. This is the first event of 2025. I'm going to take some of the best of the 2024 educational moments that we had and put them together into 1 hour to start 2025. I think you'll enjoy this a lot, and if you enjoy this, be sure to check out the other many educational events, articles, and Trade of the Week videos that you can get access to on the DTS Free Stuff page. When you're on the home page of DTS, just look to the left and find Free Stuff page. So for now, sit back and enjoy. Good afternoon. Echo is gone. Sound check, everybody. Hello. How's the sound, everyone? All right. Hi, everybody. What do you have in Colorado? Snoo? Snow? What is that? What do you have in Colorado? Snow? I don't know what that word means. I'm not sure there's such a thing as the best snow around. I had enough snow in my life. Snow is great to visit for a couple weeks a year, maybe. But when snow turns black and ugly and icy, then it's no fun anymore. All right. We all set? All set for a good new year, 2025. Hope you all had a nice holiday. Hope a lot of stuff going on across the United States. I hope you're all doing good wherever you are. I know West Coast got some fires and pretty cold up north. And we have poisonous fog and UFOs flying or drones flying all over the place. I wonder if this is the apocalypse. All right. So for the first event of this year, I decided, never done this before in the 7.5 years DTS has been going. Never done this before. I decided to do an educational highlight of 2024. The reason I did that, this is going to sound very egotistical, but I was looking over some events. I was looking for something, and I was looking at an event. And when I do these, I mean, when I get a thought to do one, I jot down some notes. I throw a bunch of words together, dictate a bunch of stuff, and then I usually throw the slides together, in just in a few hours because I've done this so often. And I often kind of forget, and I go back and look at some of these presentations, and to me, I'm like reading them for the first time because I kind of forget about them. I'm like, wow, this is some really good stuff in here. Somebody ought to be really looking and paying attention to this stuff. So I figured, why not go through and highlight the events from last year? So last year I started doing these kind of these formal events once in a while. I did not go through the impromptus, by the way. I maybe should have done that. So this is just the first one here is actually a coffee at DTS. And then I went through the 12 events of last year, one for each month, and decided the easiest way to do it would be just to go ahead and pick out a couple of best slides from each one. It turns out there's a couple I didn't include, actually 3, so I think I have 9 slides here. And it just kind of what I would, kind of pull out to be the highlight of that event. Naturally, a lot of these events simply were, pretty long, and I can't get the whole point across in a couple slides. But I thought, from my point of view, what the highlight is. And I think this probably has some good benefits because number one, probably nobody saw all the events. Number two, if you saw it, you probably forgot it. Or if you saw it, maybe you didn't really pull the summary out of it that I wanted you to. Sometimes you get lost in the forest and you and it'd be my fault if you missed the main point because every event has a theme to it, if you will, and a main point. So I try to pull some of the main points out. And naturally, to the extent you can go, you can go back and look at some of these, and if you want to get some highlights on some of these. So let's get going because I think I do have quite a bit of information here. Highlights of 20. Now that's not a typo because that is the highlights of last year. I'm very leery every year of writing the wrong year because I tend to do that. But so far I've been flawless as we go. Educational highlights. That's what you got in your email. I don't need to read anything there. So what didn't make it? There's 3 events that I didn't include in here. The first one, scalping is a time frame, not a strategy. It's a great presentation, but it builds on one topic and hard to pull. I couldn't pull like, a couple of points out. It was like I'd have to do the whole presentation. So I didn't do that. What's needed to be a great trader investor is actually one that I was going to fix up, and I was kind of negligent in this. I don't think I put on the site yet. I want to put it in the special DTS section. So I'm going to kind of, repost that and fix up a little bit because I think it's a timeless one that's really nice. So I didn't want to include that in this. And it's all about how you get there. There's another one of those that was just the whole presentation, built itself, and I just can't pull out a couple of main ideas. You know what I mean? So as we go through these, this little gold box I put here, that's something that I added today. So I took the slides from you. So it's kind of easy for me. I just stole slides from old stuff. And the gold box is kind of what I'm highlighting today or what I felt was important to highlight. All right? Any questions or anything before we get going? So number one, kind of a biggie to me. I went back and the first thing I looked at, the first thing I did last year was actually, or was the second thing. First, the second thing I did last year was Sunday morning coffee. And I don't do those too often. I've been doing them once in a while. But when I looked at it, the main theme of the Sunday morning coffee, I just kind of take questions and things like that. But my topic was my themes for 2024. And one of them in there I want to make a big deal of. I think I did a pretty good job trying to convey these themes. Now, these are things I really wanted to pound across throughout the year. That, the revelation that all the people that, have been trying to make it on their own, I don't know anybody that succeeded without some help of some kind. And the big one here I want to focus on is the second one here. And there are just some of these events, some of the topics are really great if you understand them. And I think there is a perfect blend here because obviously I'm not here teaching the seminar program. You all know that. That's a separate thing to learn how to trade. But some of these topics here are great if you are a seminar student. They are critical. You're responsible for knowing these topics in the free events. If you're trying to learn on your own, some of these are great. And so many people are people that you tried trading a while ago and maybe you were working and you're doing it part-time and then you kind of gave up on it for a while. Now you're coming back. I get a lot of people like that. And these are some of the highlights that maybe make a huge difference to you. Like you realize a lot of people after they try it and I tell that story about the book where that psychologist goes and interviews 25 successful traders. And the one thing they all had in common was that they all lost a big chunk of their account. I hate to say that, but that's a big thing they all had in common. But the point was that they all got mad and frustrated and dug in. And that's what I hear from a lot of people who tried it and failed and they got mad and they're like, man, if I could do this again, I'd really do it right because I wouldn't do the stupid things I did the first time. So a lot of that is what I try and teach here in these free events, things that are just can click with your brain and really make you a lot better, whatever level you're at. And this to me, believe it or not, is one of them. So I want to first of all state that I'm really big on the topic of psychology. I'm not boo-hooing it at all. But here's something I realized, and I get to realize this because I'm in the seat that I'm at, where I get to talk to all these people that are not just seminar students, but want to be seminar students or other people's seminar students or people who are new and asking questions. And I came to realize something, and that is that claiming psychological problems 90% of the time is a crutch. Do you know what I mean by that? 90% of the time, from my point of view, sitting in my chair, it's a crutch. It's an excuse, in other words, right? You know what I mean? Because what happens is, if you don't know how to trade, if you don't know how to do something, right, everything becomes a psychological problem, right? If you don't know how to do something, you're forced to do it in front of a group of people, you're forced to do it, and there's pressure on you, you're not going to do it right. And if you don't want to admit you don't know how to do it, you're going to say, oh, yeah, psychological. It's just psychological. I messed up, my mind, malfunctioned. But the first step in understanding how to trade is to really know what you're doing. I use the excuse or the example all the time of giving a speech. I've talked in front of large groups before about trading, and I am completely fearless. I have absolutely no fear whatsoever. But if you were to put me out there and talk about something that I didn't know 100%, I would be really, really shaky about it. I'd be nervous, and I would have psychological issues. So I'm not saying that some people don't have psychological issues. What I'm saying is that you have to earn the right to be able to claim a psychological issue. In other words, you have to kind of prove you know what you're doing on a normal situation, normal day. You have to prove that you know how to trade, that you know how to read the charts, and that you've done it and you've been successful. And now all of a sudden, here's the problem. Paul, I can't get myself to do what I know I need to do. And if you've proven that you know what you need to do, then you have a psychological problem. And it's great and it's something you can work on. But my point is for so many people, you can't just sit back and have, but just a half-assed training. I always say, if you're not at the 90% level of understanding charts, you're not going to make money. And most people don't get above 50. So you just get this very poor understanding of charts, and then you lose money and you say, oh, yeah, well, psychologically, I just didn't hold it to my target. And if you go back and look at your past trades and you just make believe, oh, all the good ones, if I would have held to the perfect number, and if all the bad ones, if I would have sold them earlier, I'd be making a lot of money. Well, I could take a monkey and say that, right? Any monkey could pick 10 trades, and I could say, well, if you manage the good ones better and manage the bad ones better, you'd be making a ton of money. So that's not the point. So I tried to bring this up in several presentations. I think it's a great summary thing. It's what you call a soft topic, and it simply gets back to the fact you have to really learn how to read charts. Technical analysis is phenomenal if you really understand it. People that boo-hoo it have never learned to understand it. All right. So the next event was January 10th. Actually, this is the first real event. I put the coffee thing there first. January 10th, a trading quiz. And this was a really fun presentation to me. I went through and threw a whole bunch of charts out there, and a lot of these are kind of tricks and things like that. But I wanted to put this number one out there as the thing. Now, obviously, the whole presentation's good. I could have probably picked any one of the questions, but they're all just small topics. And this one to me was kind of a big one. And coincidentally, it turned out to be something that is very applicable. Here's the question, and I'm going to let you answer this because it's been a long time. Um, After a really bad day of trading, I'm assuming you're day trading in this case, okay? It could be though swing trading, a bad week, but if after a really bad day of day trading, you should do what? Go ahead and give your answer whenever you want to. A, take the next day off. B, trade with half risk. C, do nothing different. D, paper trade until you've made the money back. What is the correct answer? Oh, we have some. I am so proud of myself. Not you guys. I'm proud of me because you got that answer right. You got that from me because not many other people would say that. Now, I got to put some asterisks here. Yeah, exactly, Art. I got to put some asterisks here. Is that this presumes that you're a good trader, you know what you're doing. Okay. Now, in essence, it's really the right answer no matter what. And here's why I say this. If you're a good trader and you know what you're doing, you have bad days once in a while. It just happens. And if you get all in a bind and you start saying, oh, I better half risk, and then you have three good trades at half risk, and then you're like, what am I doing now? And the point of it is you just simply have an off day, some off trades once in a while, and yes, you review your trades, and yes, you make sure you didn't do something stupid. But if everything checks and everybody says, okay, you know what? Some trades lose. I just happen to lose a few in a row, and you know what? I'm just going to get back in there and hop on the horse tomorrow and do it. Now, if you have another bad day, then you got to take a second look and say, well, wait, maybe I'm not looking at this right. Maybe something's wrong. What if you're not a good trader yet? What if you're learning? Does this still apply? And the answer is yes, because if you're a new developing trader, you are or should be following a very distinct plan of progression, right? And it tells you what to do. So in other words, when you're learning, the answer is still do nothing different because doing nothing different means you should do whatever you've been doing, which means following that plan. And if that plan says, well, one bad day, don't worry about it, just go keep on going. But if the plan says, wait a minute, if you had a bad day, cut back the risk. Well, then that's different because you're following your plan. But the point is you're not going to change everything because of a bad day. You either follow the plan you're on if you're new, or if you're experienced one bad day, you say, hey, that's the way it is. And, ironically, some of you get an email from me that are in the room, or if you've been in the room and you're a seminar student, I leave you on there. Maybe you got left on, but it's basically for the room people. And I send a watch list out, and I'll oftentimes kind of report on the day. Well, yesterday I had a bad day. I had a really bad day. As a matter of fact, it was a record bad trade that I had, and I told that to everybody. Because a lot of people aren't in the room. Some people are part-time. Some people are maybe absent from the room for a while. They're coming back later. So I just made it public. I said, hey, I just had a terrible day. And I said at the bottom of the email, the bottom of the note, I said, just write out, well, tomorrow, just right back at it, nothing changes. In other words, saying right here, this is what I do, right? And today I had a good day. I didn't quite make up for the bad day yet, but I made up for a third of it, and it was a good day. And I didn't do anything drastically different. Just everything clicked today. I had the right stuff at the right time. All winning trades, 3 winning trades, whatever it was, or two winners and 1 break even. I don't remember, but it came out well. So I think that's a fairly big thing as well. And that was again, what I'm trying to do is pull out, to me, what the main theme was from each presentation. And that's what I like best on that one anyhow, do nothing different, okay? Next, feel free, anybody who has a question, just feel free to throw it out there, interrupt, that's what we're here for. So next event was March 6th, increase your odds. And I may have skipped one in there because I didn't like something from it. Here's a big one, and this is a big one. Understanding proper, and when I did this presentation, I had a whole bunch of them. I X'd them out initially to see if you could guess what they were, but you could probably guess what that says. Proper share sizing. Understanding proper share sizing has a far-reaching impact. I want you to really understand this. Like so many things in life, there's different levels you can learn at. Remember, wasn't there a book about Animal Farm? Is that what it was called? And it was a kid's book. But at another level is about management, and then another level is actually about Russia. Remember that book? It was like 3 different levels of understanding. Well, a lot of things are like that, and technical analysis is the same way to me. You can have just kind of general understanding, right? And when I say to you, sure sizing has a far reach. Well, sure sizing important. Sure sizing is important. If I said that to you, the 101 understanding would be, oh, well, yeah, of course. I mean, that's going to determine how much money you have online and how much you may make or lose. I get that, Paul. Well, okay, that's just a stupid 101 understanding. Of course, everybody gets that. What you don't understand is, and that's why it says a far-reaching impact, or maybe you don't understand, is the total impact of what all is involved in having the right share sizing. Most people do everything backwards. They start off too big, and then they don't get big enough. And there is a video about this. This is on the Free Stuff page. It's in the Hall of Fame, so it's going to be there forever. And here's the link to the Free Stuff page, but I certainly hope if you're new, maybe you're misplaced it, but there it is. And I'm just going to highlight that, but you should watch that whole presentation because, and it's an old one, it's from the first year, but there's nothing new to say on it. One of the biggest problems is that, starting off. When you start off, there's always this debate you can read on the internet about paper trading, don't paper trade, do paper trade. Forget what the idiots say on the internet. You do paper trade when you start, period. I don't care if you have $1 million that you're willing to lose. I don't care how smart you are. I don't care how long you've been at it or if you're brand new, whatever it is. Just do this one thing for me. Just prove to me you can make money on paper. That's all. It's that simple. Just 2 days, 5 days, 10 trades. Just prove to me you can make money. And what's funny is sometimes you can't prove that you can do that. So why waste money? Here's one of the biggest points of this as well, is that as soon as you put money on the line, here's a question I always ask some of our students when I'm teaching. And basically, I'm just going to run through it and give you the answer. But basically what I go to ask is, if you have a $1 million cash account and you take out $50,000 to day trade, in other words, you're pretty rich, you have a lot of money, this money is nothing to you. And then you go ahead and you paper trade for a few days. And then you go and you risk $5. I ask the question, are you going to be freaking out about $5? And most of the students tend to answer, well, no, because they think that my point is that if you risk small enough money, that it won't matter to you. And that's not my answer. My answer is, if you've ever been in that position, is yes, you will freak out. Why will you freak out, everybody? Even if a $1 million account, you're going to freak out over losing $5. Why? When it's your first real trade. You've been paper trading, you're making money. Right, exactly. Yeah. And that's the right wording too. It's not that you lost money. Nobody cares about losing money at a certain point in their brain. It's that you are a loser. It's that you learned this, you studied this, you paper traded, made money, and now here's my real record. And 6 trades, I lost $30. Well, that could have been $3,000. It could have been $6,000. Thank God it's only $30, but you feel like a loser. So the point of it really is that your brain kind of shuts down the minute there's money on the line, because the big fear in the market, the thing that drives most things more than anything else, is the fear of traders being losers, your own internal fear of losing money. And that's what makes everybody want to get stops to break even and take small profits and all this good stuff. And sometimes those things are right to do, but not for the reason of fear. So this fear is what drives a lot of stuff. And when you have money on the line, that fear is immediately impacting your brain, and your brain shuts down. You stop learning. And this is the time you have to learn. So at some point you have to go from paper trading to real money, and it shouldn't be very long, because once you can prove the platform, you paper trade, you understand what you're doing, you start your trading plan a little bit, you get your strategies down, you kind of figure out what you want to do. You prove you can make some money over a half dozen trades, then you throw $5 on a trade, literally just $5-10 is all you want to do, because that first level is going to freak you out a little bit, and you want to keep the money as low as possible so that it does affect you as little as possible. And then from there, what you do is you continue to build, and you build a bank and then raise your risk amount based on the bank you build. Even at $5, you build up a bank of, let's say, $40 from 8 wins net, and then you go to $10, et cetera, et cetera. So you're never really going in the hole, so to speak, or at least you set up a limit of how much you would go in the hole. So the impacts of this are incredible. And on the other side of the scale, people also mess up, right? So you're at 5, 10, you keep progressing, you're up to $100, $200, $300, and then maybe somebody says they're a day trader, and let's say they're making 1 hour a day. and they're at 300 and they're at a $300 risk, but they want to make $600, right? Well, the thinking that people have is I'm going to stay very conservative and keep my risk at $300 and take twice as many trades. Is that a logical way of thinking? Is that a logical way of thinking? To double your profits, double your trades, does that make sense? Right. Again, Mark, I like to speak in objective terms whenever I can, but mathematically it's impossible, right? Because you are right now taking the cream of the crop of your trades, right? That top tip of the triangle. You're scanning, you're looking, you're finding and entries and market timing and all this good stuff, right? And you're taking the top four trades, let's say, right? So if you're going to double that, you've dipped down into a lower odds set of trades. You just did, right? So the real answer is once you have confidence, you keep raising the risk amount slowly. You don't go from 300 to 600 in one trade, but you just slowly keep raising it. And if you look at your record, here's your entry, here's your exit, here's your entry, here's your exit, entry, exit, and you had so many shares and you made so much money. Well, if you double the share size, you double the profit. Period. That's all there is to it. You can't do that mentally, but you work up to doubling your risk amount. And the only time that there's a little asterisk to that formula is when you start getting into larger risk amounts, $1,000, $1,500 a trade, and you are more of a scalpy personality, because then you have to factor in the issue of share size. You start needing to take 3, 4, 5, 6, 7,000 shares of a stock, and you're day trading. You have to restrict yourself to certain stocks because you can't trade anything out there. But there's still going to be 100 stocks probably you can trade for the most part. So this is huge. This is something that men have more of a problem with, I hate to say, because I've seen it before where it's just like, oh, Paul, yeah, it's $100 is nothing to me. I'm going to start with $100. I don't care if I lose. No, that's you don't understand. It's not the money. I know you don't care about losing $100. It's that your brain shuts down. And also, I always love to ask this question. Men only answer this. No women answer this. Men, if you start out risking $200 a trade, which you shouldn't, and at the end of 2 weeks you're down $4,000, how do you get that $4,000 back? You're risking 200 a trade. You haven't gotten a trade rate in 2 weeks. You're down $4,000. Yeah, you double down, right? That's what men will do. That's what ego will do, and that's the stupidity of it. And that's how you blow out, accounts. So you don't do it that way. All right. If there aren't any questions, I'm moving on. That's a favorite topic of mine. That was the whole list for that day. You have increase your odds. A whole bunch of stuff we went over. That was a nice presentation. All right. 4 technical analysis fallacies. This is from April 10th. So again, there were 4, obviously, this evening that I did this, 4 technical analysis fallacies, another one of my favorite topics here. And I'm not redoing the whole presentation. So the one I picked out here was this whole concept here. And it was number 3 on the list. This is really the line here that I want to emphasize is here. I want you to truly understand why I'm so against technical indicators, backtesting, and a half dozen other things that I preach about all the time. I have no ulterior motive. I can incorporate indicators, backtesting, or anything else into what I do, to what I teach. There's no conflict. The pure reason is that they simply do not work. Broken clock is right twice a day, so it's easy to be fooled and think that they work. I feel an obligation to go all on the right foot by sharing facts. As human beings, we are flawed. We have a tremendous perception bias. Traders want to believe they work because they're easy and they're a quick fix. Here's my simple test. I've been saying this for as many years as, well, I couldn't say this a long time ago, but since I've been starting my company at DTS, I've been saying this since I started. Prove me wrong. Nobody's ever even tried. Prove me wrong. Show me the indicator that works. Show me the magical piece of software. Show me the moving average that fixes everything, whatever it is. There is no such thing, and you know there's not. So stop trying to look for it. There's no such thing as being 100% objective in trading. It cannot exist. It does not exist. Again, mathematically, there's no such thing as 100% objective trading. It's been tried. It's failed. It'll never be the case. And once you introduce a modicum of the needed art, you cannot backtest. It's impossible. You'll be testing something you will never do, and your test will not react to change like you can or should. Again, my ultimate proof is, there are all these backtesting softwares out there, and the theory is, and even if you Google it, all the wonderful educational sites for traders will tell you, wow, this is really great. You just backtest your strategies, and once you see that they work, and this is a quote from an internet site, then you will have the confidence to trade them going forward. Well, that's a load of malarkey because they won't work going forward. It worked in the past. And once again, my ultimate proof is show me your back tested strategy. Show me that strategy that you found that it back tested and it worked and now you're using it in the future and it still works. It doesn't exist. It just doesn't. Paul's voice. Good one, John. Um, I wanted to say one other thing here. Oh, yeah, yeah. So it's said on, to start off with, I have no ulterior motive. I mean, somebody cynical or new to DTS that didn't know, but they would say, oh, well, yeah, Paul, you're saying this so that people sign up for your seminar program, and you just don't want people to take the easy way. Well, that's ridiculous because I would teach this. I would use this. My whole goal, my number one goal, and you need to understand this, my number one goal is to make money for me. My number one goal is to teach it to you. And somebody criticized me once for saying that, but I think you ought to think about that. That's the order that it comes in. It has to, because I can't teach you if I'm not doing it. So one and two. And for me to make money, if any of this crap worked, I'd use it. Why wouldn't I use it? Why wouldn't I say, hey, look, here's what I teach, but you know what I love to do? I love to pull out this indicator to confirm this or to confirm that. No, it's just a complete distraction when you know how to trade. And most of you listening to me know that and understand that. A lot of you in the seminar program, I'm sure you agree with me. And I get into more detail about how you could use one thing a certain way, but basically speaking, they're no good. Now, there is a concept of backtesting that you can use, but it's something nobody does. You can't backtest strategies. It's ridiculous. But what you should do, and what I teach in the seminar program, involves backtesting your past trades. In other words, look at what you did. That's where all the value and the gold is. Look at your trades and then do a whole lot of it. I can't get into this too much because it's a big topic and I talk about in the summer program, but you get into a lot of what I call what if scenarios. You know, you take your past trades and then you talk about what if I would have done this for the entry? What if I would have changed the strategy to be this? What if I would have managed it this way instead of that way? That's where your backtesting gold comes in because you know why? Those are the trades that you took. Those are the trades that your brain pulled out and said, "Hey, this is what I do, but I'm not quite getting the results I want to see. How can I tweak and improve those?" Guess how many people do that? And practically nobody does. You know why why does nobody why does the average trader never do what I just said when I consider it to be the most important part of learning to trade? Why does nobody do that? You can type it, go ahead. Nobody will be offended. If they are, it's their fault. Why does nobody do that? Maybe they don't know to do that, but you know, when I started 24 years ago, guess what? That's what I did. Nobody told me to do that back then. There was nothing close to what I teach today. Just the way I was. I was like, okay, I did this. How can I make it better? Why does nobody do this? That's a real question. Why does nobody do this? Kind of like to know your thought. Why? And what I kind of said there was that you could say that you don't know to do it, but I think that's garbage because I knew to do it my first month of trading and nobody taught me that. Why does nobody know to do it? It can hurt. Yeah, I mean, people, Glenn, like to review their trades when they had a winning day, right? Go brag about, fill out their forums and brag about what they did. Um, but yeah, when they're losing, yeah, you're exactly right, Stephen. Yeah, they're just lazy. You know, it's not the thing to do. Just come back the next day and hope by osmosis something's going to be different, but you'll never perfect and improve on what you do. And that's why I've always been so big on tracking, because I think tracking things really helps you a lot to improve what you do. And here's another sad one, and it's something you'll never see from me here at DTS because this is me, it's my company. I'm here to whether you're here at free events to teach you all that I can, if you're a seminar program member, to teach you everything. But I tell it like it is, and I don't hold back anything. Back at the company I was with before, and I may have mentioned this once or twice before, but you know what we had to do? We had to include mentioning fundamentals as something to look at. Even though basically every trader that was teaching there thought that was garbage, why did we have to talk about fundamentals? Why did we have to say, like, include it in things to say, well, the fundamentals or something we'll include in the analysis? Yeah, exactly. It's the sales team because so many people think that's what to do and you'll turn them off. You know, I don't care who I turn off. I don't give a crap. If you don't like what I have to say, that's fine. Go out and fail for the rest of your life, whatever you want. But fundamentals are useless in trying to determine what to do. And I know for some of you are new, you say, what? That makes no sense. That's crazy. Well, come to the intro class that I'll be doing. Well, the next one is going to be January 31st. And I explain it in a way where you can't even argue with me. Right, Eric? If you're on the other side of the argument on fundamentals, you got to walk away and just shrug your shoulders and go, man, I'm sorry I even started that. There's no way you can believe anything else. But for the average person, not knowing, you say fundamentals are stupid, they're just going to walk away. And of course, for, like for a sales team, they're like, oh, we can't do that. We can't. I don't care. I mean, either I'll convince you, or you'll find out on your own someday, whatever. But there's lots of things like that that are just the truth that you need to hear, and I'm very blunt about speaking them. There's other things I couldn't talk about back then either, like how to manage stops. All right, next one. Technical analysis is great. I love saying that. A couple of tools you can use right now for May. We're halfway through the year. This was a tough one to pick something out because there were, I went through 4 tools that you could actually use, like kind of a little mini lecture of things or just some light comments from the summer program. Volume is always a fun one to me. And this is a comment I still hear all the time. Have you heard this recently? I mean, maybe not recently because we've been in an upturn for so long, but the market has been higher for many weeks, but I do not trust this rally because it is happening on light volume. That's one of the dumbest comments, and it's made by so many, commentators out there. Understand, I don't want to get into the whole thing about the financial programs out there. There are some smart financial people on financial shows, but they're not allowed to say what they want to say most of the time. Most of the financial people on financial, they're just game show hosts. They just interview people, and they really have no knowledge of their own what to say. And to say this comment is ignorant. It's just crazy to say that. The truth of it is that a rally occurring on light volume is actually more bullish than one on heavy volume because there's a finite number of buyers. And the market's moving higher with few buyers is because the sellers are backing off and the buyers haven't even participated yet. So it's just a stupid comment. I always joke that books on volume, and by the way, volume is something I use without question, but there are entire books written on volume, and I always say you could throw out the whole book and just save 3 pages because the rest of the book is nice water cooler talk, but it won't make you a penny. That's something else that I really emphasize a lot is learning what you need to know. There's so many things that you hear and learn in places that teach you a bunch of garbage that you just get confused because it's not meaningful. It's water cooler talk. It's meaningless knowledge you can spew out at a dinner party, but it's not going to help you make a penny. One of my favorite sayings is always, that never made me a dime. I don't look at it. I think that's a good thing to say. And then out of that whole presentation, this is just an example of one thing that I pull out that, here, this is the price candle on top, and this is the volume down below. And we have a huge red volume bar because this is a red bar above. Is that bullish or bearish? That's what the slide asks. Is that bullish or bearish? What do you think? Bullish or bearish? We have triple the volume on a red bar. Triple the volume on a red bar. If you're saying bearish, let me ask you, what if this bar closed 4 cents higher? Then it would be green volume bar down here, right? Would you then say it's bullish? Because the price of a $30 stock closed 4 cents higher? So my point is, volume is tricky because even if it's, a big green candle, a big red candle, you have to remember that to say that even a big green candle is bullish, you have to get some air quotes around it because we're not really sure. Because remember, for every buyer, there's a seller, or at least for every share bought, there's a share sold, right? So you may say, well, Paul, that bar had 4 times the buyers. And you know what my reply to you is? It also had 4 times the sellers. So looking at volume that simplistically in a vacuum doesn't work. It has to be in coordination with the chart and what's going on. This big volume here, I mean, given the chart pattern, I would lean bullishly, but whether this is red or green is completely meaningless. That's the point of, that slide, and that's the point of that presentation, actually, that part of that presentation. Many things are like that, and volume is one of the favorites to me. I like a lot of things about volume. There's things I use in volume every single day, but a lot of it is not really important to making money. Next one. This is May 8th. Most popular strategy analyze remains a favorite, although it costs most traders a lot of money. This here was going through a whole bunch of examples of a breakout play. But here's the bottom line to it. Breakout plays are favorite among novice traders. Why? Why are they favorites? Time for a sip of beverage. Why are breakouts and breakdowns, well, mostly breakouts because nobody's bearish. Why are breakouts favored among intermediate, novice traders, newer traders? Why? It's a very simple reason. Yeah, exactly, John. They're easy. They're easy, right? They're easy. Anytime, anytime you're going sideways, right, in a nice little base, boom, that's a breakout, right? Well, according to me, according to DTS, this is not even a breakout. Anybody who call that a summer up or call that a breakout, I'd throw them out of class and slap them with bamboo shoots or something. But it's not even a breakout. But breakouts are deceptive because they look so easy in a sense. And then people talk about ascending, descending triangles, isosceles triangles, and flat bottoms and flat tops and all this garbage. And none of that really matters. What really matters is where the whole breakout concept is happening in the price pattern, which is 100 times more important than the formation of the breakout. And the entry on the breakout is everything. So people fail at these a lot, and then they call them unreliable. Well, I've seen a lot of people take breakouts bullishly that are actually shorts. There's a chart pattern, and many of you would know it, where when you break across the top of the base, you should short it if it's a clear pattern. And yet people go along there and they say, oh, the breakout didn't work. It's not even a breakout. You don't know what you're doing. But the point of this whole section to me was this right here. This is what was on the slide. And this is to me is what's so important. And this is to me a big, huge, overreaching topic that I try and focus on a lot. And that is, but the underlying understanding is what makes you a trader, how to read a chart. Strategies, therefore, are just a product. They're somewhat meaningless and in a vacuum worthless. Now, I do label things as strategies because I have to communicate and we try to put pieces together and package them and say, okay, here's something. You like that, John? That's one of my favorites. But here's the under the scale that maybe help you understand what I mean by that. Once in a while in the room, I'll have a trade. And what I do in the room on the summary sheet at the end of the day, I try and put just a couple words for what the strategy was for, like mostly just for seminar students, just kind of give a title, right, John? You've seen that. And sometimes I'm pressed on what to call it. And that's not a bad thing. It's not because I did something wrong or something I can't name. It's because I understand charts and I knew, blah, 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 whatever it was that I saw, I knew that that was a long. And I knew it was going higher. But if you want me to package it in a polite little, concept of what was the strategy, I'd have to say, well, I'd probably give you 6 comments and say, well, it was this. In other words, it's not being able to name the strategy. It's understanding the chart to say, you know what, that thing is higher. I don't even know what you call that, but it's higher. Now, a lot of times things are so clean, we have nice little names for them, right? Transition, A and D, and all this good stuff. But sometimes it's just that. And that's what's important because the opposite of that is, here's a real extra credit question. What's the opposite of what I just said? What a great question. I don't think anybody would get it because only my stupid mind would work this way. But what I just said about not even being able to label something, but yet it's a great trade, what's the opposite of that? Yeah, no, it's a term I use all the time. It's something I hate. It's even been the topic of a presentation. Oh, the topic was, oh, those blah, blah, blah. I'd be so shocked if somebody, you got it, Andres. Exactly. Cookie cutter patterns. That's exactly the reverse. In other words, you just take some very loose words and you put them together and say, oh, here's a head and shoulders pattern, right? Here's a head and shoulders pattern. Oh, there we go. That's lower. And that is just putting a name on something that really has no great meaning or strategy. You look up what a cookie cutter pattern is, and it's like, it's the worst entry in the world. And actually, technically, I don't allow a cookie cutter pattern entry to at least to my understanding what cookie cutter pattern is, because it's the most unreliable thing, and not only unreliable, but it's the worst entry even if you're right. So it's understanding charts that matters, and then you can call things whatever you want to. As you progress, on my own personal tracking sheet, I have funny little names I put that only I know what they mean. I don't keep that track going all the time anymore, but I always have my own little names for stuff. Yeah, a couple. I'm gonna come to another one here. It's funny. Great, John. I'm glad you liked it. And funny, we should talk about that. Andres, man, You know something, if you would have waited another second, I was going to say I'm going to give somebody 2 months free in the trading room if they get the name, and you blurted it out there just a little too fast. But nice job. I mean, you're really in tune with me if you got that, because I think that was a tough question. Learning from the internet. This one is hysterical. I did a whole presentation, and I was just trying to really be objective. You know what I said? I said one day, I'm always ripping apart all these trading sites that they're just there to make money selling advertising, and they don't really have a clue what they're doing. So I just say, you know what? Let me put my money where my mouth is. Let me go really investigate this objectively. Let me just objectively try. Let me even try and prove that they're right. Let me go to the internet and see how well it could get me trading. Okay? And truly trying to be objective about it, it was a joke. And I'm gonna be laughing at one of these so hard in a minute here. It's hard to even get through it. But so here's some of the stuff. Here's some of the stuff, and this is Investopedia. This isn't Bob and Joe's trading site. This is Investopedia, who I guess is a respected site for traders. I don't know. I mean, it's the number one visited site. Crossovers are one of the main moving average strategies. Did you did you did you know that, Eric? Andres, did you know that's one of the main strategies out there? I can't even talk right now. The first type is a price crossover, where the price crossover over the moving average point is signal, blah blah blah. There's moving average crossovers price. This is one of the main. This is one of the main strategies out there. This is complete garbage. I mean, it's complete garbage. You don't have to be very good at charts to see how insane this is. Only a fool would fall for this. What's amazing to me is that this is still out there. Yeah, but I don't understand how it can still be out there. You know, it's like I get Bigfoot because I guess nobody, but to say I saw Bigfoot in my neighborhood, right? And then to post it day after day after day after day, at some point somebody's gonna say, wait a minute, I live in this neighborhood, I never saw Bigfoot, I think you're lying. I mean, how can you keep putting this out there when it's so blatantly wrong? I mean, just as an example, I mean, here's just a random chart, and sure, I could find a chart that totally disproves this, and you could go find a chart that proved it worked. But like I say, a broken clock works twice a day, and finding a chart, and yes, then you can change the moving averages and blah, 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 and change exponential to this and change all this, and then you get them to work, but it's not going to work on the next chart. It's just ridiculous to think that this will work. There's no mathematical logic to why it would work, but moving average crossover means that you would have gone long here, 1 bar before the high of the day. It means you would have shorted here, 1 bar after the low of the day, and then you would have gone long here. Well, it went higher, but it would have been after the price moved the entire daily range already, and then you're starting to go long. Just ridiculous concepts, you know, and you couldn't possibly have anybody doing that. And you could sit there and change the parameters and tweak it all you want, get it to work one day, it's not going to work the next day. And this is stuff that's taught on the internet, something new. It's no wonder so many people, this is one of my pet peeves, is that people will say technical analysis doesn't work. And say, what do you mean? And then they pull out stuff like this. You know, I used the RSI indicator and it didn't, and you know, I lost money. Well, of course it did, because you're not doing technical analysis, you're doing make-believe indicators. And here's Eric, this is the one, this is the one that I just, I don't even know if I can say it. So, simply put, a bottoming tail is a bullish signal and a topping tail is bearish. That's not, did you know, that's not even true. It's not even true. It's easily proven. But here's the funny one. For a bottoming tail to be bullish, it must occur at the low of the chart. So here's how you trade. You wait till the end of the day. You find the bottoming tail that occurred at the low of the day, and then you go back and you buy. You go back in time in your time machine. I know. Exactly. Everybody, here's how you make money tomorrow. When you hit the low of the day, go long, all right? I'm going to be bold too. I'm going to give you a second strategy for tomorrow. When you hit the high of the day, short it, okay? This is real stuff. I mean, this is not even a copy and paste. This is a picture from, again, this is investing.com. Absolutely just hysterical. And this is what people are looking at. I mean, come on. Is a bottoming tail even bullish necessarily? And no, it's something that I've taught before. Bottoming tails are not necessarily even bullish. It's again, you're looking. A bottoming tail in a vacuum is a cookie cutter term. It is not necessarily bullish at all. And you can find this all the time. Whoops, right? Bottoming tail, time to go long, right? Well, nope. Well, there's the real bottoming tail, time to go long. Whoop, no, I guess that was way off. And sure, you can find bottoming. There are times that bottoming tails have some effect, but you have to understand the whole picture. Again, there's the language of charts. It's understanding technical analysis to understand when a bottoming tail may have some effect and when it's totally irrelevant. If you were to look, for example, at any one of these bottoming tails, this is what chart is this? 5 minute chart, 2 minute chart? Well, the underlying chart, the 1 minute chart, the tick chart, would never have broken its downtrend in either one of these bottoming tails, right? John's in the room. He's talking about he trades Morgan Stanley and that. Right. Good timing here. Last one. This is very recent. Perception. This was the last one. This is December. Perception, how it affects your trading. I really like this one a lot. This was going through and looking at a whole bunch of charts and asking you to vote on which was more bullish or bearish. And I subliminally put things there that may have affected you. There are all kinds of great things in this presentation. I can't even think of some of them. But like, for example, one of them was I showed you, and this one amazed me. I showed you a chart and just said, how bullish is this on a scale of 1 to 10? You gave me a rating. Chart, looked at a bunch of other stuff, showed you the same exact chart, except I just made it look a little different. And I said, and I put Tesla's emblem on it, and I said, this is Tesla, bullish or bearish. And 30% more people said bullish just because it's Tesla. Is that amazing? I was so shocked when I did this because I was hoping to see results that kind of prove me right, that the perception is incredible. It was 10 times worse than I thought it was. In other words, just because you knew that chart was Tesla, you were bullish. And I said specifically, this is sometime in the past. Tesla's been up, it's been down, it's been all over. So it's not like, I said this is from last month where you know what it was. I took the dates off. So just because it was Tesla, people thought it was more bullish. Yeah, thanks. But that's the perception that people have, and that's the problem. And all this stuff gets in the way when you're trying to trade. That's why you have to blank your mind out. And one of the things I talk about when I teach is removing all the incorrect stuff from your brain so your brain can properly process what you need to know. And that's what a lot of people don't do. They have some vague concept of technical analysis, and then this other stuff gets in their way, all this perception stuff. So I couldn't really put slides from the perception presentation in here, but this is kind of the bottom line of it, which is this. Stop trading what you think should happen or what someone says should happen, and who is that, by the way, anyhow, it's just their opinion, and trade what is happening, charts. I know this is a common cliche, but it is so very, very important. Thank you, John. And, as a side note, since you mentioned that, as an educator, you know what my biggest issue is? I'd say almost half the time. My biggest issue almost half the time. Anybody guess? Yeah, I would say almost half of current seminar students or very close wannabe seminar students are traders from a little bit in the past or traders who've been trying to learn on their own. And they're obviously not successful because they're coming to me. I had one guy, honestly, one guy told me he spent $75,000 in education and he hasn't learned a thing. And that's, I don't know if he's lying, exaggerating, but there are a lot of people that spend over $25,000, $30,000 on education and they feel like they haven't learned anything. And the problem is that then they come to learn it the right way, so to speak, and all the stuff's in their head. And part of it may be, hey, I paid for this. I don't want to throw it out. I got to use it somehow. Or some people just get in the habit of looking at the wrong things. And getting them to look away from that is very, 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 very tough, right? I've explained it, again, mostly in seminar, but sometimes in free format settings, how truly useless it is to try and look at and understand the news. It's so silly to me when I explain it properly that you're going to read a news article and then say what you feel the stock is worth, even though it's been trading for a whole day. It's ridiculous, but yet that's what people do. They'll read a news article and say, oh, I can't short this stock. They just announced good earnings or whatever it is. You got to clear your mind of the junk that stops you from making money, right? Exactly. Traders' habits, perceptions, just that junk and the problem sometimes, Andres, is they may not even know that they have it. It's not like when you have this problem, it just jumps out at you, right? It's not like when you go to take a trade, you say, okay, the chart's telling me this. Oh, but then I read that article. Oh, wait a minute. I shouldn't be reading the article. That's not what happens, right? Your brain just subconsciously processes a final result and you spit it out. And you never really get a chance to go inside and look and say, okay, what made that decision, right? At least people don't do that properly. So it's so really important to learn what to do, to blank out the wrong stuff. And to focus on the right things. Sometimes easier said than done for some people. Thanks, Mary Lou. I'm glad that is clear and it made an impact on you. Price is baked in there. Yeah, exactly, Lope. I mean, it's the whole thing. I mean, look, for a lot of these concepts, what you need to understand is that the market, and I'll say price action, whether it's the market or any stock, it doesn't matter, but price action is the most forward-looking indicator that it is. It already has engulfed and enveloped things in the future that we don't know to what extent, right? And that's why something happens like a terrorist act or this or that, and people say, oh, why didn't the market drop? Well, the market has built in a certain expectation for this or for that or this or that. That's why the market rallied for a long period of time while inflation was still going higher, and people are confounded, are just confused. And people on the news, the financial shows, again, one of the stupidest comments I've ever heard. The market doesn't understand what's going on here. Okay, the market doesn't understand. I mean, that's one of the dumbest comments you could ever say. So you keep shorting the market, whether it goes up 30%, and then you tell me that the market's wrong. Okay, well, what did that do for you? You lost half your account. Stop trying to find an excuse in support of your bias instead. Yeah, that's it. It's called justification, John. That's what it's called, right? That was in this perception talk. That was in this presentation talking about justification. You have a certain view. There's all, this last, and by the way, this is on the free stuff page still, perception. It's just from the last one. The last couple are on there. It's a great one to listen because it talks about the three different things that affect you, perception, and the other one is that justification thing where you have a certain bias. And then there's selective perception where you only look at, read, or remember the things that confirm with your pre-existing belief. And therefore you never change. And it goes on and on and on. And you have to just start from a zero and say what really matters. And then you have to get confidence in what you've learned because that's where you overcome all the psychological problems is to get the confidence. You get confidence by learning and building from incremental share size, from doing the right thing and see it work. See it work enough that you make money. Nothing works all the time. Great conversation, guys. Wow. Great conversation. Questions from anybody? I've never finished 5 minutes early, but I'm 5 minutes early. More. What about when there are major fundamental shifts such as in NVIDIA and Tesla, maybe five? Here's the only thing that matters more is shock value news. Shock value news. Now, shock value in the whole market, just to give you a clue what I mean, has only occurred twice since I've been with the market in 24 years. And one was 9/11. The market did not anticipate 9/11. The other one was COVID. The market did not anticipate COVID. Everything else has been built into the market. Now, there are excuses why the market drops. Even this whole inflation thing, that was not, the market did not drop because of inflation. The market, if you would have had that situation and the market looking like it did in 2009, we would have rallied. In other words, when you have profits built up and we're up so much and we're up so much and all the big players have profit and all the money's in the market and everything's in there, any excuse will create a little snowball effect to lose the money. But it's not really just because what was said, it's what was said was a spark, right? And if you drop that spark onto a bucket of water, nothing happens. But if you drop it on a bucket of gasoline, you get an explosion. And if you have the right chart pattern, a spark will do that. But it's not really the spark, so to speak. All this fundamental stuff you're talking about, major fundamental shifts, most of that is anticipated ahead of time. And it's mostly buy the rumor, sell the news. Now, for individual stocks, now I said for the market, there's two shock value effects. For individual stocks, they happen frequently. In other words, you could have a good example of a shock value effect would be if a stock has been anticipating good earnings. I'm drawing on the screen here a little bit. Anticipating good earnings, right? And we're going up and it kind of plateaus while we're waiting for earnings. And then it starts to move up and then they do their earnings and truly shock value earnings come out, right? No leak, nobody knew about it, and the stock gap's down to here. That's shock value. Nobody anticipated that. Now, if that happens, the thing is more, you don't need to read the news. Here's what matters. I know on this chart pattern that there are people in here that are long that have to exit. And that's going to generate selling, it's going to keep going lower. So I don't care what the news is. When that happens, if there's a shock value chart event, I don't care what's said. As a matter of fact, I don't care if that stock gapped down on good news. I'd still be shorting it, right? Because I would never look at the news. You see what I'm saying? Now, if it's not a shock value thing, it's very likely it's been built in. And you saw that with, a great example more. I have a long-term letter that I do, and going back a little while, I shorted MU. And you know when it was? It was right about the time that they were announcing the government was giving, the money to semiconductors or something like that, right? Remember that a couple of years ago? You know what I'm talking about? And it was right after they made that announcement. And I shorted MU, and it worked great. But somebody who gets the letter emailed me and said, Paul, you know what? Great trade, but you know what? I couldn't take it. I couldn't take it because they just read about all this money coming into semiconductors. Well, guess what, More? That wasn't shock value news. This is news that at least people in the industry knew, people in Congress knew, blah, blah, blah. So this whole run up was the money going to semis. And maybe it ran up another day or two, and then everybody looks around and says, okay, how come this good news isn't taking us anywhere? Well, the reason is because all of us already bought it. So what do? Okay, well, we sell it. It's all in the chart. It's all in the chart. So whether it's just the typical news, which it is 99% of the time, or it is some kind of shock value news, you don't ever need to know what it is. And think about how that frees your mind. You may want to read and understand that stuff as a human being more. You may want to do that just to understand things. That's fine. I do that sometimes too. But you shouldn't do it for your trading because it's completely irrelevant. It doesn't matter what you think. What matters is, just for an example more, how about this? Let's say you have a fairly bullish stock, right? And it goes up, it plateaus here or something. And it has some good news and it starts to move up. And then after the good news, it just starts dribbling lower. Well, what if that happened because XYZ hedge fund needed to sell 500 million shares of that stock over the next month? Well, what caused that? We don't know. They just made that decision. Some big stakeholder that they have said, I want to get out of this. Somebody said, I want to cash out. So they decided to sell it. Well, see, we follow the chart pattern. We don't make it. We don't pretend we know what it is. And sometimes chart patterns are made, and that's what we have to react to. All right? Technical analysis is the only tool that there is, Mary Lou, for 99.999% of anybody who wants to make money. The exception to that would be somebody with inside information, which is usually illegal, or somebody who has the money, Mary Lou, to do their own independent research. Not reading the internet, but I mean to go do your own independent stakeouts, whatever you're going to do. I don't even know what it is, but otherwise, what matters is price action, because following price action is following what all the big money is doing. And another clue that's maybe helpful to some of you that I emphasize a lot when I teach this is that what may be confusing to some of you is you look at a chart and you say, I'm not sure where that's going. Well, 97% of the time, I don't know where it's going either. I may be able to make comments, but I wouldn't take a trade on it. See, what we look for more, Mary Lou, we look for those specific chart patterns where they jump out at us and say, you know what, something happened here. I can tell from that chart pattern that people are going to want to buy it and some people have to buy it. Or I can tell from the chart pattern, some people have to sell it and some people want to sell it, right? CVNA, Carvana on last Friday with the news that the upper people were faking the numbers. Is that shock news to consider? That could not have been seen in the chart. Somebody mentioned in the room something about CVNA news. Well, last Friday, is that shock value news? To me, no. To me, nothing. To me, shock value is rare. Here's what matters, John. The gap up was moderately bullish. But whatever caused it, whatever was said, and that's the great thing. I don't even know about real numbers, fake numbers. News came out, they're fake. What happened Friday, technically speaking, is moderately bullish. I don't love the chart. I'm not going to do anything with it, but I would bet higher odds are higher just based on the chart. And I don't care what was said. I don't care if they announced they are fake or they're not fake or whatever it is. So you don't, what you need to know, what shock value news does, it doesn't always create a tradable pattern. In other words, shock value news just simply means that this is something prices didn't expect and it's going the other way. But just because it starts going the other way does not mean it's a tradable event. It doesn't mean we know it's going to continue that way. Certain chart patterns do become very tradable, as you would know. We call that like a tier 1 gap, for example, right? All right, 6 o'clock. Are there any other questions? Great event to start the year. I love the participation and questions. That's great. Feel free with any questions. We don't have to leave right now. I'm done talking unless we have any other questions. Oh, wait a minute. I had some. Oh, the calendar coming up here. Coming up next week, we'll have our first biweekly scanning session of the year. And then Wednesday is a platinum member event. That's just for platinum members. So unfortunately, you're not all invited to this. The dark blue is seminar program stuff. So then after that, these are two seminar program events. And then we have another biweekly scanning. So for you free people, there's two biweekly scannings come. And the intro class is for everybody. It's not in purple, it's in blue. But the intro class you'll get invited to as well. It's a 4.5 hour class. And there's actually a little slide on that. It's at the end of the month. And it's right before the next series of live seminar classes takes place that next Saturday and following. Okay? Comments? You have comments, John? I saw some people typing. What do you got? Just want to say, Paul, it was great connecting with you again. Thanks, John. Look forward to seeing you back in the room here this week or whenever you're back. Thanks, Andres. Thanks, Mary Lou. Welcome to DTS. Yeah, so anytime you see them, it says ET there. I do, and anything that goes out, we put the time, the ET to make sure you know. But I mean, when we're talking in here and we're talking about, I traded the stock at, 12 o'clock was the high, we're talking 12 o'clock Eastern time always, right? All right, I see one more comment coming. It looks like we're done, 6:05. Everybody have a great 2025. I want to make sure that you are all profitable, however you go about doing it, whether you're learning on your own, being careful, whether you're going to talk to me or join the room or eventually take seminars, whatever you want to do, it's fine. If you're just going to be a free member, that's fine. Remember, I'm here to help you, even if you're just a free member, so don't be afraid to email me. I'm even happy to get together with you and look at some charts even as a free member, okay? I'm here to help you do what you want to do. No pressure, all right? Thanks, everyone. All right. Have a great evening, and for you free members only, we'll see you next Monday remember tomorrow's a holiday, everybody? It's Jimmy Carter Day. Markets close, so trading with people see you on Friday. Free members see you next Monday for bi-weekly scanning first one of the year. Take care, everybody. Have a good night.